Hey, this is Awais with eMiniPlayer.net, and this is a recap for Friday, May 17th. Now, before we get into the charts, let's quickly review our pre-market trade plan. So, overnight, responsive buyers pushed ES up to the 54.5 to 56 resistance. Heading into the day, we'll be using the 54.75 to 56.75 as the micro bull bear zone to establish our short-term directional bias. A break and hold above it would indicate buyers in control, whereas a failure there would bring the overnight low and the 48 gap into play. Bigger pictures, buyers remain in control, so the expectation is for responsive buyers to be active on pullbacks into support. The main economic catalyst in the morning was consumer sentiment at 8:55 a.m. Central. It's also options expiration, which could result in some choppy price action. Now here's a very key point that helped us in the morning. Yesterday, so Thursday, was an inside day, and it's unlikely that we'll get two inside days in a row. So that means if we break and hold above 54.75 to 56.75, ES could print a new high. And on the flip side, if we haven't made a new high and ES starts heading lower, then there's a good chance that ES could test below 46 before really finding some responsive buyers in this market. On the upside, above 54.75 to 56.75, we had pre-market resistance at 58.75 to 59.75, and the expectation was that ES would remain below this zone heading into the econ report. Following the report, we could get some directional movement, holding above the bull bear zone after the econ and on strong internals would raise the odds of a break to new highs today. And on the upside, we had initial resistance at 16.64 quarter to 66 quarter, and that zone has potential to cap the upside. Overall, despite the underlying directional bias, the expectation was for rotational movement in the ES, and again, we're using 54.75 to 56.75 to establish our short-term directional bias. Alright, so that was the trade plan heading into the day. Let's jump into the charts. So we can see that right as ES opens, we're opening on relatively strong market internals, right? S&P advanced decline is opening above 200 and pushing higher. The NYC tick is opening above 0 and actually holding right on this little pullback down, and here we're testing the 0 level on the NYC tick. If we look at the breadth chart, we can see that the NYC advanced decline is also pretty strong. And also keep in mind that this whole rally that we've had in the last week has happened on pretty mediocre internals, right? Where even that big trend up day that we had, where we got the breakout above 31.32 into 48.49, even that day, the NYC advanced decline was right around 1,000 for most of the day. So we've been moving up with lack of broad market participation. So today we finally actually got broad market participation, right? On Friday, we got strong internals, a D line on the S&P, relatively strong, and on NYC, and that's within the context of a market where it's been printing new highs despite relatively mediocre internals, right? So now we finally got it, so now we have directional bias, right? That helps us establish our directional bias. On the 1 minute chart, we can see that, first test of the micro bull bear zone ahead of econ, get some selling. That's not much of a surprise. We usually get kind of choppy price action heading into econ anyway. Here is where the econ report comes out, and you can see that right from the bull bear zone, we just get a upside move into that pre-market resistance zone. At this point, once we get this push up, now, if you're quick, you're getting long right over here, right? And then scaling out on this push to new highs. But in the event that you missed kind of this initial move just because it was on an economic news event, and it can be tough to get filled on an order when price is fluttering up and down unless you're just hitting market. So in the event that you didn't get filled here, the next trade setup that we saw was on this pullback down to the 52.5 to 54 area. And if we go to the 5 minute chart, it makes it a little bit clearer to see why that was a trade setup for us. So 54.75 is the bottom of the bull bear zone over here, right? And then 52.5 to 54 includes the IB low the opening range low, the 24-hour midpoint. So all of that is right here. So in our own account, what we did was we actually bought this push down to 55.75. That was actually our first entry. We bought it, but we went long over there knowing that that was a more aggressive price, right? And we took that price because we didn't want to miss the upside. We felt that the risk reward is very good, and given that now we finally had some alignment again in the markets, right, where the internals were showing us some strong underlying bullish bias. And if we look at the other markets, we can see that on the Russell, pushed above its overnight high and actually made new highs on the year, right? Before this, 991 was the yearly high on TF, and it actually pushed to yet another new high. So it's making new highs. The only warning sign was NQ, which was kind of depressed, but you have to understand that NQ consists of 100 stocks, and out of those 100, Apple is actually, I think, somewhere around 20% weighted on NQ. So if NQ is anytime kind of out of line with the other markets, you definitely have to check what Apple's doing to get a better understanding of this intermarket analysis, and just to improve on it. And if you're going to use it, then you kind of have to know what Apple's doing if you're looking at NQ. If you're not looking at NASDAQ, then of course it doesn't matter. But we saw that NQ was a bit depressed, looked at Apple, and we can see that Apple kind of gapped up and then was just more in a almost like a trend down on the day time frame, right? Just heading lower. But as ES was pushing down into that 53, 54 area, Apple was actually hitting its support from the day before, right? So you can see over here, Apple was essentially a trend up the day before and then balanced in this range. And at this point now, Apple was actually pulling into its support zone. So when that's happening, we know that that's the main thing keeping NQ pretty depressed. And as soon as that downward pressure lifts, then NQ is going to pop pretty good as well, right? So if you're using intermarket analysis, it does make things more complicated, but that's the way to do it. So we knew that TF was pushing to new highs, NQ was depressed temporarily because of Apple, but now Apple's coming into support, so we're looking okay there. So what we did on this trade was, we didn't want to miss the upside because our initial resistance zone was about 10 points up from this area, right? So there's a lot of upside potential in this long setup. So we actually put on a trade over here at half size, and then we put on another trade. We actually added to this trade at 53.75. And the idea was that, once this pops up, perhaps take a scale out because it is options expiration, right? And the market can be kind of weird. So that's what we did. Took a scale out over here. And then we were looking for a move to new highs on the day, right? So the next place where, if you're conservative, you can technically take a scale kind of over here, right, at the pre-market resistance zone. But given that we were running 100% of relative volume, which means that, we're expecting around a 14, 15 point range, it made sense to hold on for some higher prices and kind of wait till you get a nice pop up here and then look to exit your position. So, if you have enough size on, then perhaps take a scale over here just because of options expiration, and then really target, the pops up towards initial resistance, and anywhere really on this pop, you can take the trade off. And that was really the play that we had in our own account. So, either here or you take it off here and then you're done, right? You're out of the market, it's hit its objective, but even if you took it off a little bit ahead of it, that's perfectly okay, right? Options expiration, you're getting at this point a pretty decent move into the closing range. So, good idea to take some profit and lock it up, because sometimes this can just push up, reject, and then head right back down. But overall the directional bias was clear. The internals were finally kind of supporting the move. The other markets were looking very good. Overall, there was broad market participation. So, we didn't have any shorts on Friday. Really, the only trade we had was, we missed this, by the way. This move up over here. We couldn't really get the price we wanted after the news came out. So, we skipped it. And when you're trying to identify, kind of within the zone, where do you want to buy, right? Just use the next zone as a immediate target, because that's the one that has the very high odds of getting hit. So for example, this zone is 54.75 to 56.75, right? So now we pull back over here to decide whether you want to take 56.75. Assume that the target is right here, right? Because this one is a bit extended, and odds are that this will get hit intraday. Even if this trade is not going to, kind of work out to the upside, this will probably still get retested intraday. So use this as the immediate target, and that'll kind of help you figure out where you want to be aggressive, where you want to be conservative. And that's why, we didn't buy the top of the zone when it came over here. We bought a little bit lower. We bought 55.75. We bought the middle of the zone, and then, the idea was that, well, if it pops from here, we'll take a scale out at pre-market resistance and then try to exit up here, right? And again, we took it knowing full well that ES could quite easily push down to the midpoint and then start bouncing up, right? So if we're taking this, we're taking it with the knowledge that this could happen, and if that happens and the market gives us more favorable trade location, we're going to actually add to our position, right? And then our stop was actually below 52.5, because we don't want to be in a position where we get in with 55.75, use an arbitrary, 2-point stop loss, which has of course no relation to what's happening in the market, right? It's completely arbitrary. So when you hear about traders using these kind of fixed stop loss amounts, you really have to question the strategy, because the stop should always be at a level where it invalidates your trade, right? It shouldn't just be a fixed, well, I always use 2-point stop and I always use a 3-point target. That's not the case, right? You have to always adjust it based on the underlying market conditions. So in this case, if I'm taking 55.75 with a 2-point stop loss, this move right here is going to stop me out, and then the market's going to do exactly what we thought it would, and we're just sitting out, just pissed off, right? And that happens to a lot of traders. So it's important to know where your trade idea gets invalidated, right? Now the trade plan said that we expect the market to either take out yesterday's high or yesterday's low. In this case, the market took out yesterday's high on this push up here. So at this point, it's very unlikely that we're even going to retest any of these areas below, right? With the directional conviction that was in the market, with the strong internals, the other markets, in alignment, it was pretty unlikely that we were going to now, just break below the IB low and start heading towards, 46. So in this case, it made a lot of sense to not get chopped out of a trade, right? So either you get in here, or if you want to be patient, you can wait for this price, but just know that sometimes the market will not give you this little pullback, right? This ideal entry. A lot of times the market will not give it to you, and it can just go up from here. And then you miss out on, a potential 10-point trade just because of trying to save, 6 ticks or 2 points. So, all that stuff needs to be taken into account. But basically, you have long setups over here. If you missed it, even this little pullback is a potential long setup targeting the zone above, pre-market resistance, initial resistance. So, overall the day played out very well. And I believe everyone in the trading room did well. And, of course, in our order count, things went okay as well. Now, heading into the overnight session, we can see that the breakout over here, right, if you focus on the profile from Friday, you can see that the breakout happened right at 60.61. So a pullback to 60.61 is essentially just a test of Friday's breakout. In the event that we go below, then we're going to use this 55 to 57 area as support in the overnight session, and most likely, that will cap the downside overnight, and then we'll reassess in the morning. On the upside, we have resistance at 65 to 67, and then up towards 70. So on the upside, essentially the existing resistance zones are going to remain in play. So let's see how this week plays out. I will provide an update, of course, in the morning, and we will take it from there. I hope everyone had a great trading week. Hope you enjoyed your weekend, and we will catch up in the morning.